Welcome to TheoTrade. This is Don Kaufman. May 22nd, 2024. We're just minutes after the cash close here on this Wednesday afternoon. We are awaiting Nvidia's earnings, which will be out really any minute. Nevertheless, the Fed just went nuclear, and the markets are just in complete and utter denial. That really is the topic of conversation, of course, of this evening's TheoTrade update. Let's get right down to business. When I say the Fed went nuclear, I mean, they're not even just talking about holding rates higher for longer. There are even, again, discussions about, are the rates even effectively high enough? Clearly, they're not going to raise rates. I don't believe that at all, that they're going to raise rates. Nevertheless, though, it came up in the conversation, and the markets, they panicked a little bit and then basically rallied right back. I mean, it's like we're sitting here again on pins and needles. What are we waiting for? We're waiting for Nvidia. The market at this point seems to care more about AI, right? And the outcome of Nvidia earnings than it does the Fed. I mean, are we completely complacent, or again, just in denial that, interest rates held high for longer periods of time? At least my opinion, it's very likely to significantly damage the economy. Obviously, we're all aware of the inflationary risks, but what the Fed had discussed was disinflation really had not yet gripped hold. So with that, again, looking at the markets that are down 17 right now, the overall price action in the markets, it left something to be desired. The other aspect that really kind of grabbed me is, the S&Ps. All right, they did about 1.1 million contracts. People, that is incredibly and inherently light volume for the kind of day where, look, no one expected anything out of the FOMC minutes. We didn't. And they did. They brushed them off. But something big did come out of it. And that is, again, the unlikely event of cutting anytime soon. But even the Fed fund futures, the probabilities, okay, of a Fed cut were really very much unchanged. So with that, again, I was a little disappointed in some of the overall volume to the marketplace. Makes sense the VIX picked up a little bit, okay? But overall, even the VIX kind of lost steam into the latter portion of the trading session. As I said to you moments ago, like one of the craziest things that we're looking at right now is, first of all, the marketplace massively unchanged on the week. We're into Wednesday. It's a holiday. We're coming into a holiday weekend, but this is, to me, it's a holiday week of trade. But we are massively unchanged. And the most interesting part of all of this, as I was saying moments ago, there is more being put into Nvidia earnings than the FOMC. And by that, I mean, if you look at the SPX, which, well, we're looking at the SPX right now. This is actually May 23rd, which is tomorrow. The expected move is roughly $42. Now, again, the FOMC minutes were today. So, today is over and done with. Obviously, we moved about $20. But again, it's the S&Ps that speak volumes that, as I said, they're putting more of a price tag on risk into Nvidia than they are effectively on these minutes. And to say that that's bothersome, as I said, it's just pure and utter denial. And look, I'm not here to bear up on you. Look, when Nvidia earnings come out in just about a minute or two, that's really what's going to dictate tomorrow. But what you have to think about at this point is, again, the Fed higher for longer. I do believe it's just going to be much more incremental damage, if you will, to the economy. It looks like we are starting to see S&Ps move quite considerably here, so maybe some of the earnings are out. And the irony is, I don't have to look at Nvidia to know I'm just looking simply right here over at these S&P futures, and it is becoming Mr. Toad's wild ride in the last couple of seconds. We can jump over to Nvidia. Knee-jerk reaction traded all the way down to 919. Here we are. S&Ps though, okay, they just rebounded. Look, they were just down 18 handles. We are now unchanged. It is still very, very early. Obviously, it's very early. The marketplace expecting almost an $80 move. Actual move right now is meager, and that is important, right? So you're not even but about a $40 move. You're about to be a $50 move right now to the upside. Again, looking for about an $80 expected move. I just want to highlight that for everybody. See, it's $79 and change. Okay, actual move right now. Again, greatly diminished over here. So, a lot of the times after these earnings announcements, it will take more than just a few seconds to actually revert higher or lower. Moreover, on announcements like this, you got to be aware there's a conference call. That conference call is going to be held in about 40 minutes. And that can very much change the way we feel about the outcome from these earnings. Anyway, we do have a bid under Nvidia at this point in time, although meager, again, in comparison to what was anticipated. And to me, look, that's everything. Like right now, what do you have? Like a $35 move to the upside on an $80 expected move. That's something that can easily, still be reversible, if you will, meaning that the S&Ps could fall back. All right, the other aspect worth mentioning here, as we're obviously watching the markets here in real time, but the other aspect that just really grabbed me is that the QQQ, so the NASDAQ, this thing actually looks, Nvidia has so much weight, it almost looks like the NASDAQ is going through earnings. And I know the irony in that, but just take a look at the May 23rd options here that are trading basically at a 31 vol, okay? And some of the back month stuff, we'll even go out to like next week, early next week, but next week drops all the way to like a 16 vol, okay? We've gone to, again, such an extent, we have such a large market cap, specifically Nvidia, but it's not just the market cap in Nvidia, it's the volatility overall in Nvidia. Nvidia, you'll say, oh, it's the third largest market cap. Yeah, you got to push that aside, because when you start looking at something like Apple, okay, all right, that's great. I get it. Apple is close to a $3 trillion company. It is larger, in fact, than Nvidia, but it's also at like a 17 vol. And I'm looking a little further out time. You look 30 days out, okay, you're looking at like a 20 vol. You look at something like Nvidia. I know it's, this $2.5 trillion behemoth, but what's not being read into is that even in the back month stuff, it's at like a 50 vol. So it's, not even twice, market cap. If you actually went in here and volatility weighted everything, Nvidia is the end all be all. It's the only product that you really want to look at. And again, it's not so much to me about the AI trade as it is, the market cap, multiplied by some of the volatility in there, and it makes it an absolute, critical component, not just to the S&P 500, but it is the component, if you will, to the NASDAQ, specifically the QQQ, which again looks like it's going through earnings. But in a larger sense, I think we're actually in store for a little bit of volatility starting to come back into this marketplace. And moreover, again, I kind of feel like, these Nvidia earnings didn't do that much. It moved the marketplace, not nearly as much as I would have anticipated. But as I said earlier, the day is young. What I'm much more concerned about moving forward in this tape, not tomorrow, not even a week from now, a few months from now, though, is what I said a moment ago. The Fed, in my opinion, they kind of went nuclear with their conversation in those FOMC minutes. As I was saying, it's not something that's just going to play out overnight, okay? But those rates are unequivocally going to be higher for longer. They're going to have to see significant disinflation before they're ever really going to take into account a cut and the possibility of cuts. As such, I believe retail, the consumer, is going to take a horrendous beating. I think that the trades that we're going to start to have to look at, stuff like Costco. Costco, look, we all saw Target's earnings come out today. Target, all right, down almost 14%. Costco completely brushed it off. Right? Don't. They're going to be what? They're unimpeded at this point. You look at something like Walmart. All right. I mean, Walmart. Now it just had earnings and so forth. Okay. At this point in time, taking into consideration what the Fed just said, okay, and what would be on the front line, okay, of that. And to me, it's going to be heavily on the retail side. I'm going to look for a lot of short opportunities in products like Walmart, in products like Costco, and down the line. Yeah, sure, the S&Ps as rates, they're not coming down anytime soon. Again, markets in denial after those FOMC minutes. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.